Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another TA Tuesday. But first, remember, none of this is legal, tax, financial, investment advice. It's your buddy G Dinero helping you increase your financial literacy to put you and your family on that path to financial freedom. So, with no further ado, let's jump right in. Starting off today, we'll start off with the Bitcoin daily chart. I'm going to do a quick daily and the 4-hour chart on each of the assets today. So we're going to start off with the Bitcoin chart. Apologize for my voice. The Florida Gators, SEC basketball champs, #1 seed going into the NCAA tournament, and we were there to watch them win the SEC. So my voice is almost shot. Okay, with no further ado, we'll look on here, and we've got a couple of long-term trends, right? The very long-term trend, here's the bottom of it, the red line that you see here, red line up here with a green line down the middle. That's the longer-term trend that we're in here with Bitcoin. Still up and to the right over the long term since the low back in 2022. So the upward trajectory on a long-term basis, looking at it on a bigger macro level, still intact. But on a short-term basis, we've definitely been in a downtrend since basically the inauguration. Since January 20th, you see that we are clearly in this downtrend, respecting the boundaries of it pretty well. The 200-day moving average has been our nemesis here for the last week. So over the last week, we've basically been going back up to the 200-day moving average over and over again and seeing that as short-term resistance, the 200-day moving average. Typically in a bull market, that is acting as support, which it did for the week prior. So you can see how this yellow line right here is that line of, I guess you'd call it demarcation, right? We need to get back up above that line. The line that you see below it, I'm going to have to remember which that one was. So that's a 1-year simple moving average down here. That currently is at around $75,000. So the 1-year moving average is $75,000. I did something interesting. I created a 1, 2, 3, and 4 year. So the 1 year is at 75, 2 years at 55, 3 years at 44, and 4-year simple moving average is at $45,000. So that means over the last 4 years, Bitcoin's averaged at least $44,000, $45,000 or more. Okay, we'll jump over here to the 4-hour chart. Remember, I had this strong line of support and resistance drawn at 91.5. Well, that became resistance back here in early March, and it's been resistance ever since. Now we're battling back and forth. You can really see it clearly here on the 4-hour chart where we're battling back and forth with this 200-day moving average. And for all intents and purposes, Bitcoin's been relatively flat over the last week. If you're caught in the thick of it, you might think, oh my gosh, it's up or it's down, but we've really traded in a very narrow range for the last week with 80,000 on the downside and 85 on the top side. A $5,000 range, or what is that, about a 6-7% range that Bitcoin has traded in over the last week or so since last Monday when we tanked, right? Last Monday was the day that we dropped down into the $75,000, $76,000 range. You'll note that on mean reversion, we're right here at the mean. RSI is right in the middle. MACD looks almost flat here on the chart. So what does that tell us? It tells us that the volatility has basically been sucked straight out of Bitcoin for the last week. It's just skipping along right there at the mean, trying to find a direction. It also means that perhaps the sellers are overwhelmed now and they're done with the selling. Now that we've dropped down and wicked down twice, basically making a double bottom back here at the end of February and again at the 10th of March. Could that be the bottom? Perhaps. Could there be a little bit further to go? Perhaps. I've heard people calling all the way down to $70,000 to $72,000 as being the floor. I'm not in a business of predicting what's going to happen in the future, but I could tell you this. If we use some of the fractals, which I think we talked about last week, I could see the end of this month marking the end of the lack of volatility or the bottom, and we start climbing from there. Why is that? Because of global liquidity, more so than anything else. It's gotten to a point now where liquidity is through the roof. inflation numbers, if you look at true inflation, are coming down. That means that soon there's going to have to be a market rate cut. And when there's a market rate cut, Bitcoin loves that and typically thrives. So there's just a lot of tailwinds in its favor. It's just a matter of if and a matter of when. So that's what I see right now with Bitcoin, though. Again, battling with this 200-day moving average. If we go over to Solana, again, the longer term, this is on a daily, longer term linear regression channel. We're still in an uptrend since 2022. We did break down below that, though. You'll notice that this part right here, all of this volume is below the red line right there. I know I kind of messed that up, but you see where the red line is below that. So what does that tell us? That tells us that we did break down some from this long-term linear regression channel. We're still intact and moving up into the right, but not at the rate that we once were, okay? The short-term linear regression channel has a 97% Pearson's coefficient. It's almost a lock. It's perfect in this linear regression channel going down, but we are starting to find a bottom. You'll note that it's right here at this 38% Fibonacci level, or the $118 level. That has acted as the floor currently. Will we retest that again? Perhaps. Could we go as low as 100 to 105? I've heard that as well, right? That seems to be the absolute bottom. But for right now, 115 to 120 is holding up rock solid. We are significantly mean reverted to the downside here on the daily chart. Go over to the 4-hour chart. We've just recently been mean reverted to the downside very significantly back on March 10th and 11th. We then had a little bump and popped back up to 135 here. What was that, over the weekend? And printed a smaller red mean reversion dot. You'll see where we're outside of this longer term channel. We're dead center in the middle of this short-term channel, kind of bouncing off. The upper part of that is at about 130 currently. The lower part of that channel, gosh, I've got to scale it, is down here at about 88. The midpoint of the channel is 108, call it 108 and a half, right? So that's the midpoint of the channel. So if we were to break down from 117, where this Fibonacci line is, which we almost tested back at the end of February. We did test on March 10th. Do we test that again? Perhaps. And if we did, what's the next level down? I would say it'd be the midpoint of this channel, which is a moving target, right? Currently at around 108 and a half. But by the end of this week, we're talking it's down at around 100. So that's where that 100 number was coming from. Also, if you were to look at VRVP, if we turn that on, there is a significant amount of volume down at 100. You'll see it populate in here, and you can see where this pocket of volume is, right? But notice, giant pocket of volume at 140 currently. We've dropped below that, and we're starting to find the support down here in this 117, 118 range. That's why it keeps popping down to there, back up, down to there, back up. But this range, we're filling volume in between, call it 115 and 125. And you can see that clearly here on the VRVP. If we go over to, the Tesla daily chart, honestly looks atrocious. There's no hiding it any other way. You'll note that the trend is significantly down, although we are printing a giant green mean reversion dot, well over 2 standard deviations. In fact, if we put a number on that, it was well over 1 standard deviation. It's minus 1.32 to the downside, which on a daily chart, if we look back, it's rare that it gets down that low. We were down that low back here in February of 24. We were that low back in December of 22. So only 2 other times since the bear market, basically, have we been that mean reverted to the downside. What does that mean? It means that Tesla is significantly oversold. There's really not that much more selling that can occur at this point. The buyers keep stepping in every time that happens. That's why you see these wicks to the downside on these daily candles. It wicks down, immediately gets bought back up, and comes back up into this range that we've been in. You can see we've basically been consolidating right now between 215 on the low side and 250 on the high side. So let's call it 220 to 250 range. Significant consolidation over the last week. And we are still trending down though. Still trending down right now. You'll note that I have a 1023 low. That's October 23, 2024. So October 23rd from last year, we did make a low, and that low was right there at around $212.11, $212.11. We almost hit that on Monday of last week, a week ago Monday. We could potentially find ourselves back down there again. That's a level we don't want to breach. Why don't we want to breach that? Because now we're making a lower low instead of a higher low. 215 is a higher low than 212. So keep that in the back of your mind. That 212 layer could also be a good place to add shares, add leaps, add synthetic longs. That's up to you, right? That's up to you. How much risk do you want to take at this point in the cycle? What's your time frame on Tesla? Do you have a long-term outlook on it? Is it something you want to trade over the next few weeks or months? That's going to determine what you're going to do as far as whether you're doing shares, leaps, or synthetic longs. You'll also note the 200-day moving average. I didn't talk about it with Solana. Jump back real quick. With Solana, the 200-day currently is sitting up here at around 183. So we're considerably below the 200-day moving average on Solana. On Tesla, jumping back over, it's currently sitting at around 283. 283 is where the 200-day moving average is. We've been below that since March the 4th. So we have not been back up over that 200-day moving average now for a couple of weeks, exactly 2 weeks. And you'll note that the 50 and the 100-day moving averages are way up here, like at 350. So we're down near the bottom of this Tesla chart. We have dropped below the 38% Fibonacci level. We're basically using that as resistance. If we were to drop down one more Fib level, that's at 193. So anything down there in that anything, and then the long-term support range is down here around 170. We talked about that line last week. So anything 170 to 200 to me is a steal with Tesla. Not financial advice, just for me. That's where I'm backing up the truck. I'm nibbling at it where it is right now and just adding to my position because I think currently for a long-term outlook, Tesla's a better buy than MicroStrategy, which we're going to look at next, which I look at as a trade over the next couple of months. Over the next couple of months, if you didn't have any MicroStrategy and you needed to add it, we're starting to find a bottom with MicroStrategy. Whereas with Tesla, we haven't really found that bottom. You note that we've double bottomed here on the daily chart for MicroStrategy, right on the 200-day moving average. That's a perfect bounce on the 200-day moving average, both on February the 28th, so the end of February, and then again almost 2 weeks later on March the 10th and 11th, we had a perfect bounce off the 200-day moving average. We are well intact in the upwards channel here that you see, this long-term channel. Short-term one, we are, but the short-term channel is starting to flatten. So it was very steep before, and now it's slowly starting to flatten as more data comes in. That's a good sign that looking like we're finding the bottom on MicroStrategy. You see the double bounce right here on the 200-day perfectly on the 4-hour chart. You also see that we almost made it down to the 38% Fib level, which was here at 217.72. Let's call it 218. We were significantly mean reverted to the downside back at the end of February. Believe it or not so much so on March the 10th and 11th. The dot was not nearly as mean reverted to the downside. RSI didn't even drop below 30 at that point. So showing you that this is starting to bounce back, looking like it's found a bottom. You note that we are respecting almost perfectly this green line right here. This is the midline of the long-term linear regression channel. Here's the upper bounds. Here's the lower bounds. I'll draw them just so you can kind of cue in there with your eyes. Upper bound, lower bound, midpoint of that long-term channel that's going up and to the right. And notice that we are basically using that as pretty much perfect resistance right now. We just bounced back off it again. So currently as we speak, now that I kind of zoomed in on or looked at that, let's zoom in on it. We're basically kind of ping-ponging back and forth right now between the 50% fib level at 280 and the midpoint of this channel, which is 300. So we're starting, the volatility is starting to compress. Typically after a compression like that, you'll note that as it squeezes that volatility, it'll typically break out one direction or the other. So as that squeeze is occurring, is the asset going up? Is it going sideways, or is it going down? Currently, the asset is going sideways for all intents and purposes. If anything, slightly up. So if as this volatility squeezes, and I'll kind of simulate that, as this starts to squeeze, the confluence clouds will also start to squeeze. And if it is trickling sideways or to the upside, that will typically break out to the upside when it breaks out. And it all of a sudden breaks out, and you see these confluence clouds start to spread again. Great example of it here. We were pretty much trickling sideways. Look at the volatility squeeze. See how these clouds got very close together when we bounced on the 200-day moving average, and it's slowly trickling up and to the right. Which way did we break out? Big time to the upside. And then you see these clouds that were very close together, right? Very little volatility, all of a sudden exploded. And look how wide the volatility was at this point. You've got the upper bounds of the clouds here and the lower bounds there. That is a giant range. That's telling you this is a highly, highly, highly volatile asset. That's also when we hit 550, and also when the NAV premium was over 4. So it hit like just over 4 that day. So it was a huge, huge move. All right, so that's the scenario for the week. All right, so I hope you found value in that today, guys. If you did, book a course with me so that you can learn TradingView and technical analysis just like I understand it, right? I go over all those different things that I've been showing you every single week after week. It's called TradingView and technical analysis. It's one of the courses I teach. I also teach a course on understanding options. If you've done a course with me or booked a one-on-one with me in the past, book another individual appointment. Let's up your game and let's make sure that you are rocking this out. So head on over to gdinerocoaching.com where you can do so. Like this video. Tell me what you like best about it. Tell me what you'd like to see more of. And make sure you subscribe so you don't miss any of the videos in the future. Again, this is G Dinero helping you increase your financial literacy so that you and your family can be on that path to financial freedom. Take care and have a wonderful day.